Um, Before we start going off in all sorts of directions, I want to ask the panel really to tell me and you what they mean by asset-centric, and when we're, are we just talking about a molecule and its surrounding paperwork ultimately, or is there a fund of knowledge that has to surround that, and that some of that knowledge is invested in essential people? So what do we actually mean by an asset-centered vehicle? So I'll start with Simon as the exemplar of one of these such things, and perhaps you can tell us a little bit about Levicept, and we'll take that as at least one example of an asset-centered.
So I'm the CEO of Levicept. It's a spin-out actually from Pfizer Sandwich in about 3 years ago, and I went out raising capital. An index funded the project mainly on the back end of Pangenetics experience, and Pangenetics was one of their successful asset-centric companies, working in a similar pathway to what Levicept is. So what the Levicept example is, I think we're still learning from the Pangenetics experience. We're running the company virtual at the moment, 2 employees. We're using consultancies and project managers, mainly through the index network. But you answer your question, it's one molecule. It's a biological, and the associated paperwork for that to get it to phase 1 proof of concept, and that's what we're focusing on. The project was seed funded initially by Index. It sort of fits really well into Index's strategy. It's a seed funded project. And initially we had to do the killer experiment, and the killer experiment was a differentiation experiment versus the competition. We were able to demonstrate that successfully, and as a consequence of that, we're pushing the company forward. But it's one molecule, 2 people at the moment.
So I'll come to Francesco from the other side of that. Is that how you saw Levicept in the first place, and is that typical of the sort of thing that you're backing under this model?
Yeah, absolutely. So Levicept is clearly a paradigmatic example for us for what we mean with asset centricity, which basically is we are taking a bet on a specific molecule. Now, this does not mean that we're not betting on the people, because how do we make the bet on that molecule? We need to believe that the person that brings us that molecule really knows what he's doing. And so, but if the same person would come with a know-how vision, with a capability vision, with a long-term vision of saying, I'm going to be able to discover this, that would be great and fine, and maybe we will do that, but on an exceptional basis. What we really need to have as a starting point for us to get involved and invest in the first place is a super smart entrepreneur that comes with an asset, with a molecule, and is basically saying, this is why this thing is going to work, and this is the plan to get this to work. Now, that basically the phenotype of the company that we will put together around that kind of pitch will be a company that will have one program with backups that will be financed in a very serial way. Of even the €1 million seed financing that we did was done in 3 sub-financings, I think. So every single mouse that runs, or mouse that wakes up, or mouse that goes to sleep is checked and is the basis for the next amount of money. So that is a corollary to asset centricity, but asset-centric is really we're investing in the molecule when the molecule is existing, and that can be early or later stage. It can even be already an early stage clinical asset. Usually, the most that we, the highest majority of the assets that we really finance following this model is really late preclinical or preclinical after some biological evidence. And as Simon was saying, there was very interesting biology, but what we really wanted to see was if there was a meaningful or a relevant or a killer differentiation towards the other ways of modulating the NGF pathway. And we believe that with the €1 million of number of experiments that we've done, we've really have satisfied this parameter. And the final comment that I would make, because of course you have a positive example here, but out of the seed pool experiments that we do, there is only 1 in 10 or 1 in 5 that comes to the next level. So here you see one that is going to the next level, but there is a big attrition that happens in the early stage. And I'm very happy to discuss with you the model under which we make this acceptable as a business model for the entrepreneur, because of course the entrepreneur is not happy to be cut after €273,000. So later I'm happy
I
to
think
articulate
we
on
will
that.
come back to that, because I'd be interested to know, for instance, whether any of the projects that you've rejected have re-emerged somewhere else. Not specifics, of course, just general numbers. And I'd be interested to know the process by which you do that intensive selection in the first place. But we'll save that for later. Bimal, can you just give your perspective on this? Is Spectrum in the asset acquiring mode right now? And if so, what sort of thing are you looking for? And how have you seen this area evolve?
Yeah, first of all, I don't want to try to repeat what these two gentlemen said. I think the way they've defined it is exactly right. I think the key differentiating feature of an asset-centric company is the specificity aspect of it. In many ways, the best way to make sure you understand is by defining it in terms of what it is not. It is not betting on a management team of 3 people that may have had success in the past and hoping that they are going to find another molecule either through discovery or through business development efforts, but they don't have it in hand right now. It is not betting on some sort of technology platform that may go in multiple different directions. It is a very specific type of arrangement by which an entrepreneur, maybe a couple other people, full-time or through some virtual consulting relationship, are focused on one single asset and perhaps the backup molecules. So I think we're all in agreement with what an asset-centric company is. To answer John's next question with regard to whether my company is in the business of looking for these types of companies, the answer is absolutely yes. Just for brief background, Spectrum Pharmaceuticals is oncology-focused pharmaceutical and biotechnology company based in the U.S. with operations in certain other countries outside the U.S. as well. We have 4 products that are approved on the market in the U.S., generating $150 to $200 million a year in revenues. And we've built the company through acquisition and in-licensing entirely of, in many cases, acquiring companies that were essentially asset-specific companies. In some cases, they had evolved certainly beyond the stages that Simon's company has. In some cases, they may have had maybe 20 employees because they had sort of gotten beyond their asset-specific nature and maybe tried to apply a certain technology platform a little bit further. Or in one case, they'd actually gone and built out a commercial sales force, but they may well have been well served by simply staying as asset-specific companies and not building the greater infrastructure, which in many cases simply meant greater costs without necessarily greater value creation. We can come back to that topic later, perhaps. So certainly we've acquired in the last 18 months 2 companies specifically for their assets. Each of them had one product. One case, the product was on the market already. The other case, it was approved but not yet marketed because the company did not want to take the next step of building a commercial capability to acquire the company. So we're very much on the lookout for these types of companies, and I think that it's a very interesting question as to what are the strengths and weaknesses, the positives and the negatives of this type of business model.